Hello, everyone, and welcome to the Sustainable Finance Podcast, brought to you by Ceres. I'm Paul Ellis, your host for these programs about developments in this fast-growing industry. Luma Saqqaf is the CEO of Ajyal Sustainability Consulting, advising corporates, financial institutions, funds, and asset managers, as well as counseling regulators and financial markets in the MENA countries on sustainable finance issues. Saqqaf is returning to the Sustainable Finance Podcast today to discuss the expectations for what will be accomplished at COP27 next month. Her sustainability consulting draws on 3 decades at the forefront of finance, Islamic finance, sustainability, and entrepreneurship in the MENA countries and Europe. But before we start, I want to say a few words about our sponsor. I'm thrilled to talk about the important work Ceres is doing. Ceres is a nonprofit organization working with the most influential capital market leaders to solve the world's greatest sustainability challenges. Through their powerful network and global collaborations of investors, companies, and nonprofits, Ceres drives action and inspires equitable, market-based, and policy solutions throughout the economy. To learn more, go to ceres.org/podcast. That's CERES.org/podcast. At Ceres, sustainability is the bottom line. Hello, Luma, and welcome back to the Sustainable Finance Podcast.
Thank you, Paul. I'm very happy to be back. Thank you for hosting me again.
Well, it's a pleasure to have you here leading up to COP27. And so we're just going to jump right into our questions. And I'll begin with, what are we expecting to happen there at COP27?
Yes, I mean, a lot of things that we're expecting. But I think the most important thing is what has been announced by Egypt itself as the host of COP27. They want this to be the action COP, from pledges to action. That's really the motto of COP27. And so under that, there are a few interesting things that are expected to be launched, or let's say formally announced. So obviously the one thing, NDCs remain an issue. We haven't achieved the nationally determined commitments by countries. We have not yet reached the amount of commitments that would get us to 1.5 degrees above industrial level. So that is still a problem. So they're going to be working on that. But the things that are now becoming more important is, okay, we've discussed that and we're hoping that we will get more commitments. What's next? And so there is a lot of focus on other things, like maybe also triggered by a lot of what's happening around us, like the war in Ukraine and all of the resulting or the consequences of that, like the energy issues and the food security issues and so on. So based on that, Egypt is announcing a number of very interesting initiatives. They've talked about them already, some relating to water security, some to food security. But of course, recognizing that any plans that we can talk about as much as we like, we need money, we need financing to back them up. So they are announcing also what they're calling the Just Finance Initiative. And this is in recognition of a lot of the problems, or let's say the gap between what the private sector and the private institutions, financial institutions, are offering, and what the countries need, and specifically developing countries. And it might be actually interesting just to talk a little bit about it, because I think it's a big initiative. It started, as I say, as a response to what is happening. What's happening is that the finance community is saying, okay, we have, if you remember, in COP26, the Glasgow Financial Net Zero Alliance announced 130 got together with assets of around $130 trillion being available for obviously net zero. And they're saying, yes, these continue to be available for achieving net zero, i.e. focus a little bit on emissions. But in order for developing countries, which are the countries that need all of this most, and I would bring Africa specifically as an example, simply because Egypt are focusing a lot on that as the biggest example to drive the initiative. In Africa, these trillions are only supposed by regulation and under fiduciary duties, they're only supposed to finance investment grade risks, and Africa doesn't have that. So what that means is the banks are saying, yes, they're available, but we need more ways to de-risk these investments. And so, for example, guarantees, getting development banks in, getting blended finance, basically in creating new mechanics for financing. But also they're saying when there is, even if we have the money and we're able to do all of that, there are not enough projects at scale that we can finance. And they're also saying, even if there are projects, the data and the ability to assess the bankability of these opportunities is not there. On the other hand, the African community or the African continent is saying, well, we are not emitters, right? Africa emits 3.8% and take the UK alone emits 1%. So you can imagine Africa really emits very little. So our needs are not for mitigation finance. We need adaptation finance. That's one. And so we need more money than the 130 trillion because those are allocated for mitigation. We need more money. And so one of the concepts being discussed is what they call additionality. Where are we going to get additional money from? Other things that are in the report revolve around, as we said, the blended finance, where more ways to protect and guarantee some of these risks to enable more investments in the country. We're still waiting for more details, but this is the amount of information that we have. So we expect that there will be a lot of action in COP27.
So, Luma, how optimistic are we about COP27 and what it can deliver? I talk to developing and frontier market asset managers on a regular basis as part of my work, and it seems like the growth potential in those economies around the world is so extraordinary over the next 20 to 30 years, and in many cases they're positioned very well to leapfrog the infrastructure of the developed economies and bypass it on the way to integrating more sustainable business opportunities. Why are the large emitting countries barking against providing more capital for the developing economies?
Well, partly is I mean why they're unable to provide finance, I guess is your question or part of the question.
Yes, it is.
I think a little bit of what I've just explained. Today, the money that is available for or from the developed countries technically is only set or ready for deployment in developed countries because of the credit risk that they're able to take. We're talking about pensioners' money primarily, right? So we do understand why that is the case in terms of risk. So the developing economies, unfortunately, as we know, they need so much more money to be able to move on climate, but most importantly on things like loss and damage and mitigation and adaptation. And today there isn't clear financing for those. So there is that struggle of the ability to try and find enough money or from sources that can actually deliver for the types of projects that are required in the developing countries. But you also talked about how the developing countries are surpassing in some ways, and that is true. I mean, in many ways, for example, as we said, Africa emits very little, so that means they are technically a lot of the countries are net positive. They are looking at now different ways of financing, and they're looking at carbon credits and selling their credits, creating carbon markets to be able to benefit from that asset that they have now that is required in order to help other countries to offset their emissions. Now we're still at the very beginning of anything around carbon markets, but it is something that is a story that is developing, let's say, and that could be something interesting. But perhaps going back to the question of what are we optimistic about COP? I think some things, as we're saying, they are on the right track. Some things are happening. We have commitments, and we are seeing countries vary, right, with what they can do and where they are with all of their commitments and the plans they have put in place to execute on these commitments. But what is becoming very clear is we keep going around money, and the initiative, the Just Finance initiative, is one of those things that is really important as it creates all these tools and explanations of how you can actually create ways to finance. But I think the big question is, will it deliver? It's a plan that, in its essence, relies on the full cooperation, I would say, between the private sector, the philanthropy, the development banks, everybody, governments, etc., to create the solution. So it really requires a big ask for it to move forward. But a lot of people are taking COVID as a good example when the world actually moved. I think the difference is that COVID was urgent, as in now, literally now, and this, for a lot of countries, they see it as a little bit longer term. So that is the biggest issue. Other good things that are happening is that we're starting to see that countries or groups of countries are starting to understand more and more that they have a lot more in common, and perhaps they can work together to create different alliances and discussing partnerships in a different way. So even the Net Zero Alliance now has an Asia group, has an Africa group. So discussing directly with these countries their specific needs and taking into account their circumstances, which are, as we're saying, are completely different from others. It's hard really to say if we're optimistic or not. One question actually is COP still relevant? And this is actually one of the discussions that I've had recently. Is it still relevant? And because of the slow pace of movement, I truly think it is relevant, simply because I don't think anything like the 1.5 degrees would have been agreed if we didn't have that kind of meeting. But yes, we need the private initiatives like the Net Zero Alliance, like TCFD, like ISSB. All of these initiatives are equally important to perhaps move some tracks quicker. The jury is out.
Well, I agree with you. And I think that this is again, we're talking about a global scale set of issues and concerns. And of course, every country has its own perspective and its own needs. I guess I'm a very large proponent of more and more cooperation, whether it's with across the developed and developing economies or both groups together, just coming together perhaps every year for as long as it takes to work through a lot of these issues. And that brings up, some of them are geopolitical and some of them are economic and some of them are culturally based. So we've got a lot of work to do as a human population. And on that particular note, what do you think the likelihood is of achieving net zero by 2050 based on where we are today?
So, I mean, if we look at the science as it stands today, and I'm no scientist, I'm relying on the IPCC reports, we are not, with the commitments that we have today, we are not going to achieve net zero by 2050. So that is a problem. But what has also, I mean, we have all these commitments that have been put forward by all the government. But what has happened is that we have the war in Ukraine, right? That war has probably set us back also by a bit. I mean, okay, we have to talk about the positive things that it has made a lot of countries focus more on renewables and so on, and we can talk more about like what's happening in the EU and so on. But it has set us back. So as a result of that, a lot of countries were actually the oil producing countries, which have the commitments to reduce oil, have been asked to increase their production. As a result of that. So on top of the fact that scientifically with our commitments, we're not probably going to achieve that, we also have these circumstances that we have to deal with today. That will keep us basically more and further away from achieving that goal, really. That is the problem that we have.
Yes, there's no doubt about it. And one of the things that gives me hope is that initially, this was the same perception that we had with COVID as a global issue, was that it was going to set us back many years, and it did in some respects, especially in the developing world and the global South. It set a lot of countries back in terms of their bringing their populations out of poverty and how they could address a lot of these issues. So I guess I'm an eternal optimist, and I still have hope for the future that we will find the silver lining of these other issues that we're dealing with right now, like the war in Ukraine and the net zero objectives. Now, let's just focus on one more thing in our conversation today, and I really appreciate you allowing me to kind of put you on the spot here. It's been a good conversation. I'm very excited about what we've discussed. So let's come back to COP27. What else are we thinking about, or what else should investors and financial advisors be thinking about when it comes to what might come out of COP27 that can be promising for the future, that can address some of the larger issues around currency and around inflation that we're seeing across the globe right now? Talk a little bit more about that from the standpoint of the MENA countries and the work that you're doing.
So I don't know if COP can resolve these specific problems that deal with interest rates or so on. I think what is expected is that these will be taken into account, if you like, by countries as they are drawing their policies to achieve these the net zero and the commitments that they have put in place. What is becoming clear, as we said, as part of all of the things that are happening and the financing that's needed, or the transfer of funds to enable all of these things, is that countries follow. One, they have to improve their commitments. That's for Okay, so that has to be developed in COP. But also we are seeing the more emphasis on, okay, but that's not enough. Countries need to put in place also a national policy, basically telling the market, its market, how we're going to actually move, where is the focus, which sectors, and so on. That in itself will help financing. I think one of the things that I think is still missing from COP is really the involvement of private sector. Private sector, not talking about the banks. The financial institutions, they have been there and they are there, and we don't know whether they will be there this year. But that's a different story. But the private sector, in terms of industries, other sectors, even energy and so on, and because these are the ones that, when the government commits, it's not really the government that's going to reduce, it's the companies, it's the organizations that are going to reduce. So what we have not seen is how involved are they in these plans, what steps they are taking as a result of the countries committing to all of these, to achieving net zero and so on. But this, as I say, it requires a national policy for every country. We're not seeing that yet, especially in MENA. We're not seeing types of legislation that could enable that. I think we talked last time, if you remember, about simple things like reporting. We don't stick to that yet. And reporting, what is reporting? Reporting is simply telling people what you're doing. But that is the starting point of you started to think about, what does this mean for me? What does this mean for my company? So even that, on a basic level, we don't have that in legislation in the vast majority of MENA countries. So I think, again, we talk about action out of COP. This is the type of action that we want to see happening after COP. That countries will come out, because we've reached the stage, as we're saying, if we wait for all these circumstances that will derail us again and again and again, we will never reach the destination. And so we do need to see individual countries, or in the case of MENA, there could be a lot of potential for cooperation between countries, and like Africa, for example, in terms of legislation, in terms of creating common markets, to increase the possibility of capital markets, raising funding for different projects across the countries. There could be a lot, because they have a lot of common problems. They have a lot of common issues. They can, I believe, find common ways to deal with these problems, which will strengthen the economies and make probably financing easier when the pie is bigger.
I see. Okay. Well, listen, tell our listeners once again, where online they can find more information and how they can reach you with questions about what we've discussed on today's episode. I'm assuming that the folks at COP27 are already putting out links and such, so that investors and advisors can tune into what they're doing. How they can get in touch with you with questions that they might have about what we've discussed in today's episode.
Sure. Very, very easy. It could be info@ajyalconsulting.com, and be more than happy to answer their queries and talk to them more about what we're doing. I'm also going to be at COP27, so hopefully we'll be able to meet more people and talk more about these topics.
Great. Well, thanks again to Luma Saqqaf, Chief Executive Officer, Ajyal Sustainability Consulting, and to our sponsor, the Ceres Accelerator for Sustainable Capital Markets. The Ceres Accelerator is a center of excellence within Ceres that aims to transform the practices and policies that govern capital markets to reduce the worst financial impacts of the climate crisis. For more information, go to ceres.org/accelerator. That's CERES.org/accelerator. And to our listeners, join us again next week for another episode. I'm Paul Ellis, and this is the Sustainable Finance Podcast.